Equities have had a shaky first quarter in 2018, down 7.5% from January's highs. Is this correction going to continue? Joining me today is legendary investor Jim Rogers. Jim, welcome back.
I'm delighted to see you, Daniela. Good morning.
Good morning. 2017, as you know, Jim, saw one of the best bull runs in the S&P 500's history. I know we've spoken about corrections in the past. How do you see this playing out here?
Well, I suspect the correction will go on a little bit longer, but soon something's going to happen to make everybody happy again, and the market will go up one more time, and then probably that'll be the last hurrah, and next year will be not a lot of fun.
What kind of correction are you anticipating here, Jim?
Well, Daniela, it's been over 10 years since we've had a bear, or it's been 10 years since we've had a bear market. That's very, very unusual. It could be 20 years. We don't have to have bear markets every so often, but we always have. So the next bear market's going to be the worst in your life, the worst in my lifetime, and I'm older than you, Daniela.
So in terms of numbers, we're speaking an over 50% correction, Jim, if I ask you to quantify it somehow?
Absolutely. The worst in my lifetime. You can look it up. It's pretty simple.
All right. Let's turn to gold now, Jim. It reached its highest level since August 2016, last Wednesday, as jitters grew over Syria and Russia, and of course that potential trade war with China. This Monday, however, gold is not really moving, and investors are asking, why not here, Jim?
Well, in my view, and I have a little bit of experience, when there's a lot of bad news and something like gold doesn't go up, it means it's not going to go up. The correction is not over for gold. Likewise, if you have something that's going up and good news comes out and it doesn't go up, then it means it's not going to go much higher. It's time for a correction. So I'm still waiting for a much, much better price to buy gold. And it looks like, at least today and this week, the market agrees with me. Okay,
so you're also still waiting for that bull market to begin then for gold?
Oh, yeah. No, if gold goes to 1,000, I hope I'm smart enough to buy a lot of gold. Because before this is over, Daniela, gold is going to go through the roof. When people lose confidence in governments and money and paper money, they always buy gold and silver. Whether they should or not is irrelevant. They always do, and they always will.
Let's turn to Trump's tax reform now, Jim. Do you think it will deliver the kind of growth the Republicans were promising?
It's going to produce growth for a while. But again, Daniela, there are many problems out there in the world. Interest rates are going to be going higher. Looks like Mr. Trump wants war, at least trade war. All of these things are not good for markets, especially after a 10-year bull run.
Jim, have you made any changes to your portfolio given the current context, or are you sticking to what we've spoken to in the past?
No, not much. I'm so lazy, Daniela, that I don't do things very often. You know, I hate to use the term, but I'm a long-term investor. I don't change very often. I'm a terrible trader, so I don't even try.
Finally, let's get your thoughts on Bitcoin. It's fallen about 60% since December. We talked about cryptos before, stealing gold's thunder last year. Do you think retail investors will favor precious metals over Bitcoin this year, now that prices have dropped so much?
Whether it's this year or not, I know in the end they certainly will. Yes, there will be money on the computers eventually. In some countries, China, they don't even have money. They don't use money anymore. I tried to buy an ice cream the other day and I couldn't buy it. I had money. She just had the machine, so she gave it to me in the end. I wish I'd been buying gold or a Mercedes or something. Money is going to be on the computers eventually, sooner rather than later in some countries. I suspect it probably will not be Bitcoin, but who knows?
All right. Jim Rogers, sticking to gold.
Yes. Buy gold when it goes down. Don't sell your gold.
Thank you so much for joining us, Jim.
Yep. Bye-bye.
And thank you for watching. We'll see you tomorrow.
Welcome to the Titans of Industry show. Claudio Glass is with us today. He recently gave appearances on many important financial shows, including on the X22 reports by our good friend Dave over there. Today, as we're recording, gold is trading for $13.51. Silver is still massively lags. gold, and the ratio is still 81-1. The CPI numbers just were published. No meaningful change in consumer prices, but oil prices have been left out of the picture, of course. So it's worth mentioning that Brent is over $70 already. Trump and Russia are colliding. The U.S. threats to bomb Syria, and all major U.S. indices are negative for 2018. Claudio Grass is a expert on monetary history, precious metals, sound financial policies. So I'm glad to have him on. Claudio, how are you doing?
Fine. Thank you very much, Leo, for the invitation. Good talking to you.
Well, you're based in Switzerland, so it's known obviously for banking, for gold, and now it's known as Crypto Valley. We published a special report at wealthresearchgroup.com/rocket on the transition into a crypto economy and the shakeout for banking institutions. Are the nation's bank in fear of the superiority of blockchain technology, or are they trying to find ways to acquire and adapt to it?
Well, I think the banking system definitely realized that blockchain and the cryptos are there to stay. And therefore, what we are witnessing over here is, of course, that you have more bankers basically being interested in the blockchain, being interested in the concept of it. Also, when it comes to a kind of centralized cryptos, which they might try to come up in the future. Basically that would be the vision of what was it, The Guardian back in 1988. I think the rise of the Phoenix, a one world currency. I think every coin has two sides, so technology really can free us, but it can also enslave us. And I gave a few interviews about cryptocurrencies and blockchain, and I just realized that a lot of people are still scared, and they see that this might lead to a total surveillance state, which can happen in the short term, because especially when I see what's happening also in the Crypto Valley in Switzerland. It seems that one of the main drivers, again, is greed. And whenever greed is involved and short-term speculation, then it can always backfire, because if something is getting too wild and it's going up in prices, collapsing, then you can also have regulators being called in so that they regulate the whole stuff, and that will most likely then lead for a shorter period of time towards a kind of centralized cryptocurrency, which could be issued, a dollar coin, for example, because the people then don't understand why we need money. The way I see a crypto in the mid and long term is definitely the denationalization of money. And because of the whole nature of the crypto and blockchain, the whole idea behind and also the way it's set up, it's fully decentralized and allows peer-to-peer transactions. So I think in the mid and long run, it will be a fantastic concept, and it will definitely make central banks and the banking system as we know it today obsolete. At the same time, it will attack centralized authorities like governments and so on. They are just losing, because with the cryptos and the blockchain, we're going to end up with decentralized communication, decentralized law, decentralized production, and of course a decentralized financial system. But right now, everything is still in the startup phase. We see a lot of activities going on, ICOs which are coming out, whereby we have to say that most of them, I just spent yesterday a few hours together with one of the founding members of the Crypto Valley, and he also told me, of course, a lot of ICOs basically are, close to fraud, because these guys were able to make so much money, raise so much money with the ICOs, and that they don't even, now they are too pampered, they got a lot of money, and so they lost a bit the driver to produce what they basically have promised. So what I want to say, to the listeners, from my point of view, the whole system, it's great, it's interesting. People should look into it. They should, I think they really should understand that it's there to stay. But I would be really cautious, by investing in all different kinds of cryptos or, ICOs which are popping up. I mean, it's, of course, the wish has always, of man has always been, working as little as possible and getting as rich as possible in the shortest period of time. And I mean, that's this high time preference. And I think we are right now in a period where it's much more important that people think about a low time preference and how they basically can preserve wealth instead of trying, to make a little fortune in a very short period of time. And we are surrounded, as you said in the introduction. We have Syria popping up. We have crises all over the world. We have, a Euro crisis. We have Brexit. We have Trump. We have this fake news. We see all these signs of disintegration, which of course bring back a lot of volatility. And after 10 years of zero interest rates, even minus negative interest rates, all these artificial financial markets have been pumped up with liquidity created out of thin air. So I mean, the only outcome is the markets go up, and that's what they have done for almost a decade. And but we always have to pay the price, and everything basically comes to an end. And I think we are really in the facing the end of a long-term debt cycle, because everything operates in cycle. And at the end of the long-term debt cycle, I truly believe you should. I mean, people always have solutions. They can always look how to protect them, but of course that will not be in the financial markets, which are completely deleveraged from the real economy. And therefore, I mean, people have to start thinking what they really, if they want to and remain an investor, short time, and trying to trade and trying to foresee the near future, like we see in the news, the daily bullshit when it comes to, the S&P went up 1%, come down 2%. I mean, that's not how we can describe an economy. That's just, that's a monopoly. That's Las Vegas. And so I think, people really should be cautious and think about their positions they have, and also when they have money in the stock market, trying to take some stuff out, and of course, put some into physical precious metals, whereby we can say that the nominal price of physical gold is lower than 2001. So I think it's a great buying opportunity, and what you have mentioned, with silver 81 to 1, I mean 80 times cheaper than gold. It's a huge gap. It's artificially big, but of course, markets are manipulated, and that's what we can witness in the last few years. I mean, the central bankers, they really own the stock markets, and they have a lot of impact. So even now, with the whole warmongering against Syria, I mean, markets are not responding. What we have seen so far, of course, is that gold went up and silver. But it just shows, in the past, most likely, the stock market would also have reacted, but that's not what I've seen so far.
Now, Jeff Gonlach, the founder and the man who runs Double Line Capital and oversees $100 billion there, he's been nicknamed the Bond God, and he sees gold making a $1,000 breakout move. I've seen his presentations recently, and he said that the base has been forming for 5 years. You can really, it's easy to take a look at the technical chart for gold and see that it's trying to break for 5 years straight from this this resistance line. I just spent 2 days straight with Mr. Keith Neumeier, who's the founder, he's the chairman of First Mining Gold, and we plotted the gold rally. The coming gold rally. Our target for 2018 was for gold to hit 1370, and then we think once that happens, gold will soon after have a one-day event where it goes up 40% a day and goes over the 1400 level. Once that happens, the gold miners will become the asset class to be in. We wrote the most extensive and comprehensive gold stocks overview and boil down that I'm aware of at wealthresearchgroup.com/gold playbook, and we're about to rank our #1 gold company for this bull market in our newsletter. It's sitting right around its all-time lows. Are we going to see much higher gold prices, in your opinion?
I mean, we had, when we look at gold over the last 18 months, basically what can be said, it has been really quiet. So for me, it was really, it was the worst 18 months since the beginning of the 90s. And I've spoken to a lot of gold, precious metal dealers, especially in the States, but also in Europe. And so the retail business, the little man on the street, and even the smart money, was hesitant. They were not going into gold. I mean, they have invested in other stuff, which, the marijuana stocks were really big in the States. Then, of course, had cryptocurrencies and so on. And still, roaring, booming stock market. So people the majority, the masses, they still believe everything is fine, and so that has gold has not, it really went sideways. But for me, it's a kind of we have a saying here in Switzerland that it's always quiet before the big storm will happen, and when I look at the fundamentals, I mean, I'm not that much interested in technical analysis because it's always based on the past, and at the same time as we have seen, I mean, markets are really manipulated, so that might also I don't believe in those kind of I also don't recommend gold to buy as a trading vehicle. I always recommended gold to buy not for the short-term gain, and then everything heads in the right direction. I always recommended to buy physical gold and silver, when everything goes in the wrong direction, so that you really have liquidity, and that you have an asset which has no counterparty risk and which is not another person's liability, and even could be used, to park money for a longer period of time instead of going into bonds, which is, definitely one of the biggest bubble overall. So to come back to gold, we have interest rates are going up. This integration is going further. We had a booming market. The short-term debt cycles seems to be, vanished. It's not existing any longer. But this is always, I think gold in 2018 and also mining stocks, they really suffered over the past. And now with this environment, including geopolitics, including monetary policy, interest rates, and so on, I think gold is excellent positioned, and will become stronger in the future. And but you need, as I said, I purchased gold back in 2004. That's the first time when I started to buy, and I always bought it because for me it was an insurance against the crash of the actual system. And then the second, it was also a possibility to save over long term. Put money on the side, don't consume it, don't spend it, don't speculate with it, so really save it. And so far, I'm still up 400% in gold, I think 300% in silver. So that has been, I was able to sleep every evening very nicely. And I think, people have to change a little bit their perspective and become a bit more hesitant.
Now, Claudio, you reside in Switzerland. Will the Bank of International Settlements that is headquartered in Switzerland, or any other governing body of banks, need to reprice gold at some point in this cycle? They had their moment in 1971. They should have done it back then. They let gold explode and the entire system become a fiat system. They've monetized that now for 8 years with QEs, with tapering, etc. Is now the time to reprice gold and simply get it over with, or will they simply allow the price to discover itself again? And obviously, only 7% of the currency units in the world are backed by gold. If this goes back to anything that's classical, like 20% or 40%, I'm not even talking about 100%. If it goes back to 20%, then gold prices will be over $5,000 per ounce. Isn't it just better for them to reprice it and make it happen in one foul swoop instead of letting panic execute to the markets?
I mean, that's a very good question, and I really don't have an answer when it comes to that. I don't know if they, because all these central banks, I mean, they are the biggest crooks, and it's fraudulent what they have done. The whole system is fraudulent, so I don't expect anything good from them. And I also don't know, how long this system is going to last and what is going to happen in the transition period now over the coming, we don't know. Maybe the system can come down next week. It could come down in the next 2 years, or 3 years, or 4 years. We all don't know. At the end of the day, it's up to the perception of the people. And so when they lose faith into the institutions, I mean, then gold is going to rise, independently of what central banks are saying, and then we also don't know what kind of monetary system, or maybe a non-system, is going to pop up in the future. But what I truly believe is real assets. I mean, the whole, also in combination with the cryptos and the blockchain, I truly believe that people will be driven back into real assets. And I just looked into, for example, one company that's offering a trading platform, the blockchain. So what they are doing basically is digitalizing real assets, and then you can trade real goods and real services against real goods and real services. And so for me, what I'm expecting is that people will start keeping their wealth in real assets, and so that will help the commodities, the real economy, and so on.
Are you of the opinion that interest rates can rise higher significantly from here, or is this a bluff, basically, and there is no real chance that the Federal Reserve can hike the Fed funds rate much further? They're just using this as a ploy to make sure that inflation stays very tamed.
Well, I think it's a bluff. But at the end of the day, the central banks, they always, over the last few years, almost a decade, they were always saying, we're going to raise interest rates. So they have to do it. They have, because otherwise, people lose their trust into the central banking system completely. So that's why they had to announce a few steps. I don't know how far they can go. I don't believe too much. Maybe another 1 or 2%, maybe 3%, but that would have a tremendous impact, because look at, we stood at 140 trillion credit in 2008, and now we are standing at 230 trillion credit. You cannot raise interest rates, because the debt is just too big, and so all the taxes which would be gained, or received by the governments, most of that money would have to go into the debt service. And I think that would break it immediately. And at the same time, of course, the stock market. I mean, look at it. It's a real bubble. And if they, interest rates are always, negative for the stock market. So there will be a shake-up in the future. And I don't know how much time they are going to raise rates. But I mean, look at the currencies. I mean, it's a race to the bottom. And at the same time, you were mentioning, inflation expectation, or inflation real in the United States. What is it, 2.3% or something? I mean, when I look, at the calculation method back in 1980 by Shadow Stats, then inflation in the US is 10%. So I mean, people are losing already 8% in real terms.
Now, regarding rates, I was recently on Rethinking the Dollar. It's a nice YouTube channel, and the host asked me if treasury bonds are a safe haven, to which I said yes. In terms of the default rate, they will not default, but the face value and the coupon payments will be horrible in the coming years. Instead of bonds, I'm personally invested in two types of unique high-yield investments, and the complete report on this, I know that we talked about this, is at wealthresearchgroup.com/bonds, and it just talks about the fact that bonds have historically have a very bad reaction to higher interest rates and higher inflation, whereas these asset classes have a very positive reaction to them. To the U.S. debt machine, how important is China, both as a buyer of the T-bonds and as a manufacturer of cheap, affordable goods?
I mean, China has been very important, of course, since 2008, basically, to bail out the whole world. and produce goods in return for computer digits and paper notes and dollars and so on. Buying a huge amount of commodities. So basically focusing on real assets. But of course, at the same time, China is also one of the biggest credit bubbles we can see. So it has been important. But when I see it on a geopolitical level right now, we have this fight, with Trump. This ridiculous, possible attack on Syria based on a false flag or based on false reports, coming from a propaganda puppet agency called, the White Helmets and those NGOs which are sitting somewhere in London, financed by, the United States and so on. Which is at the end of the day, it's a deputy war because it will be, Russia will be involved, China will be involved. If there would be a larger scale of military intervention, and at the same time we see that China is they started trading their oil futures in renminbi, which is a direct attack on the dollar monopoly, of course, when it comes to the petrodollar. And they also built up this gold trading hub among BRIC nations. So China is definitely a kind of game changer, but at the same time highly indebted, also extremely unstable. So I would never, at the end of the day, when I look at the actual system, and it's a kind of, controlled opposition. We are just, figures in a chess game, and just imagine that, three guys can decide to attack a country without having, the Congress approval, without having, even a bloody UN mandate. Okay, the United Nations is worthless anyway. But it just shows, how far we have come and how dictatorial, basically, the structures are in which we are living. And, Syria can be, what's happening in Syria can happen in different regions all over the place. And this is accelerating, anyway, that war which is built up between, the Islamic or the Muslim world against the rest of the world, but which is, from my point of view, artificially created. Because, the oldest strategy is always, especially in times of this integration, divide and conquer. Make sure that the people are focused with each other, that they start fighting each other, that there are only two sides. And so when they are fighting with each other, they are not looking at the top, to the people who are basically responsible for that big mess.
Now, bond yields on the 2-year and the 5-year are now higher than dividend yields on the S&P 500. This has traditionally hampered new buyers from coming into the market. How will the bear market transpire, in your opinion? Do you think it will be a short-lived one, a sustained one, or will we see a sideways market for a few years? What's your take on how this bull market ends?
I don't know. I really don't know. I think also, I truly believe, that people are going to lose in the paper market, in the bond market in the future, if they also, if you look at it in real terms, and therefore, we should better focus on an investment strategy. Where we can sleep, even things are going completely in the wrong direction. And I think now we have the whole combination is there, for black swan events in the future. But they can also prolong it, and we might go sideways. I really don't know. No one has a crystal ball, and no one knows the future. And that's basically the way I'm investing. I don't want to be. I don't have enough money to speculate so that I can say, if this is going in the right direction, then I will be happy. But it could also, take away all my savings, and delete it within, seconds, for example.
Now, where can people find out more about what you do and where you write and everything like that?
Well, they can basically go to www.claudiograss.ch. So that's my homepage, and I'm publishing in English, but also in German. So I'm writing about geopolitics, I'm writing about gold, about the Austrian School of Economics, the principles of a sound economy. And so they can subscribe there also for, I publish on a regular basis, but I'm not spamming the people. So maybe you have an update once a week if I have written something. But that's where they can check me out.
Claudio Gress, thank you very much for joining us and being generous with your time.
Thank you very much, Leo, for the opportunity. Take care.